Welcome back everyone to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Well, it's been a strong session for investors, largely thanks to easing concerns around UK's financial system, Santo, and perhaps rising bets that central banks may soon halt their interest rate hiking wagon.
I hope so, I will say, CJ.
Yeah, absolutely. I think Santo, if you look at our markets today, yes, we have come off a little bit from the day's high, on the back of the Bank of England's, statement that came in where they have denied the fact that they're going to probably delay the gilt tightening or the quantitative tightening, measure that they were supposed to take by the end of this month. So clearly, because of that, we have come off day's high. But otherwise, it has been a very, very strong session. We were edging closer to the 50-day moving average of about 17,495. We touched that level. Actually breached that level, for a short while, but then we have come back below that. Apart from that,
we're not too far from that still, CJ.
Yeah, we are still only, yeah,
exactly.
I think we are just 10-15 points away from that. So clearly, I think we are going to end the session near the day's high. If you look at some of the global cues, the US stock futures were quite strong, largely on the back of the UK government pulling back that disastrous mini budget that had almost put the entire UK bond market and global bond market into a turmoil. And apart from that, Santo, I think what has also helped this rally that we have seen over the past 3 days is the fact that FIs have been forced to cover their short positions. They had net short position of about 100,000 odd contracts as long as almost 10 days ago, and now that has almost come down to 85 to 84,000 contracts. So clearly there is some bit of short covering that is happening from FIs, and that is aiding the bulls' cause.
Well, I think as I see it, bulls seem to be living in some kind of denial. Every now and then they keep hoping that probably the rate tightening cycle is over and now we are going back into the interest rate easing cycle. This despite the fact that central banks time and again have made it very clear that controlling inflation is their #1 target. But well, that said, CJ, I stand by what I've been saying all these days, namely that this India outlier theory, there's only so much that it can withstand or it can hold, because at some point valuations is also something that investors will have to consider. And right now at this point in time, given the way that the second quarter earnings have so far come in, market has been very cautious. We have not seen any stock react very sharply to results. Wherever, even if the numbers have been meeting market expectation, you have seen the stock coming off. And also there has been cut in price targets and earnings estimates for some of the leading companies. So at this point in time, valuations is something that I would be very careful of. And besides, CJ, as I have been saying, the huge retail positions in single stock futures.
Maybe, Santo, you seem to say that central banks will call the bluff of the market. I think it's the other way around. It's the market that is calling the bluff of the central bankers, and I think in next 6 months we would know that market will ultimately prove itself to be right, because market is always right. As we know, you being the veteran of the industry, you know that markets ultimately are proven right, and policymakers, investors always have to play catch up.
Well, yes, it works at some point in time, CJ, but if you again then look over a longer period of time, there is also a case that sometimes market or the bulls in particular seem to have hopes very high. That is how probably a bear market starts.
Possibly. That said, there were a lot of stocks that were in action today. I mean, with the earnings, momentum now in almost very strong. You have on a daily basis a lot of companies coming out with their numbers. A lot of action is happening. Out of that, we picked out 5 stocks, Santo, that we thought that were really important today in today's session.
Yeah, and starting off with ICICI Prudential Life. Now, the numbers were decent. However, the market has given a thumbs down to the stock. Probably it's still not satisfied with the numbers that have been posted. But if you look on the positive side, the value of new business reported by ICICI Prudential Life, that has been quite healthy. For the first half of this year, value of new business has risen by close to about 25%, and the company had guided for the full year an increase of 23% in value of new business, and now the company appears to be on track to meet that. Also, CJ, the company right now is going through a change in its overall strategy and its product mix, and which is what probably not many investors are very comfortable with, which is why perhaps you are not seeing the kind of movement in the stock that one would usually associate. Also, at this point in time, if you look at the valuations according to Moneycontrol Pro, they are at a steep discount to both HDFC Life and SBI Life. But at the same time, given that the company's strategy, that is moving away from ULIP schemes and offering more of term insurance and annuity schemes, there's a transition underway at this point in time, and it seems to be working well. It could take some bit of time, because also there are the accounting norms. So, for instance, the commissions that you pay to agents, those need to be recognized upfront, while at the same time the premiums have to be amortized over 4 quarters. So, these are some of the issues at this point, which is probably leading market to be a little cautious, but valuations are fairly supportive, I would say, CJ.
Yeah, probably, Santo. I think valuations, I mean, on the valuation front, clearly there is not much to argue there, given that the fact that the company has been trading at a discount for quite some time now. But I think for me, I think the reason why the market has reacted so harshly against the earnings is, if you look at the top line performance, I think that was something not much to write home about in terms of the annual premium equivalent. If you look at it from a 3-year perspective, to adjust for the COVID impact, it has only grown by 2% on an annualized basis. So that goes to show that clearly ICICI Prudential has struggled over the past 3-4 years compared to its peers like SBI Life and HDFC Life. Apart from that, yes, the company is going through a tough transition into getting into more protection products, but HDFC Securities is actually skeptical whether it can sustain the margins as well as sustain the profitability basically in the group protection business that the company has been doing recently doing okay-ish. And apart from that, Santo, we both know that during times of such transformation, it's always a difficult journey, and you can't say with guarantee that you will always emerge on the right side. Sometimes these sort of transformational changes into the business model can go awry, can get delayed, and that can always hit expectations as well as valuation multiples. And I think I'm not surprised by the fact that the market is right now, valuing it at a discount to peers like SBI Life and HDFC Life. Well, the first stock on my radar today, guys, is Patanjali Foods. Now, this is largely a long-term pick, Santo, long-term in the sense that for the next 12 months, because the way, the industry is shaping up, it seems like Patanjali Foods could end up being one of the most sought after stocks next year, according to a lot of brokerages. I mean, the company, of course, it is trying to get into the food business, but let's not forget that it's also trying to make itself a crude palm oil player, right? Because India is trying to India is making efforts to become a net exporter instead of being a net importer of crude palm oil. And I think in that play, Patanjali's name clearly comes up in front. Apart from that, the company has been showing a lot of aggression in terms of, the targets that it is setting itself in terms of top line, in terms of market share, and it wants to take on some of the established players in the FMCG space head on. So I think that sort of an aggression will probably, be taken quite in a very good way by investors. And if you look at what brokerage from Trend Riser Securities had to say, this is one of their Muhurat picks actually for the next 12 months. And they believe that the stock could give as much as 100% return, Santo. So clearly, one name to look out for.
Well, again, as far as the fundamental goes, clearly the company has been showing marked improvement there. But, I was just looking at the price chart of Patanjali Foods, and when you look there, it seems as though there's been some bit of accumulation, and now that the floating stock is quite low in the stock, probably those who are controlling the supply at this point in time are pushing the prices higher. So, in around May, you saw some huge volumes for 3 or 4 days, or almost a week or two. Average trading volumes were close to about 40 to 50 lakh shares per day. That has now come down to less than 3 lakh shares per day. So, clearly there is very little floating stock. 80% is held with the promoters. Domestic institutions and foreign institutional investors put together hold less than 5%. 15% is with high net worth individual. So, I would say at this point in time, it pays to be a little cautious, and because a lot of stock has been accumulated, it has gone into strong hands, and maybe at some point they may come raining down very hard.
Possible, Santo. I think that sort of a risk will always remain with with a newly, I would not say newly listed, but a new life that has been breathed into Patanjali Food, which was earlier known as Ruchi Soya. So clearly that is there, but I think fundamentally the stock is looking quite good. And I know our viewers will have a lot of views on this, so please do post those views in the comment section, and of course we will take that up later in the show. Also, if you have any questions, Any stock that you want us to, give out our thoughts on, you can always use the hashtag AskMC and post it in the comment section. Santo, your stock, next one.
Well, Tata Elxsi, the stock has been has fallen quite sharply in the last couple of trading sessions, and mainly the second quarter numbers have fallen short of market expectations. Now, in the last 3 years, if you see Tata Elxsi, the major driver was margins. The margins saw a dramatic improvement somewhere in the post-COVID era, and because of that, 30% odd was the operating margin, and because of that, the market was willing to give a higher multiple to the stock. Now, that has changed after the company's somewhat cautious guidance, where it has indicated some bit of pressure on margins, saying that once it moves to the work from office format, then travel, other expenses such as travel and all would go up. And this already led to a compression in margin in the second quarter, and now this is all likely to be the norm going forward also for the next few quarters. And this is mainly at this point what the market is worried about. Ideally, for most IT companies, Q1 marked the bottoming of margins, but with Tata Elxsi, the reverse seems to be the case. The margin, in fact, seems to have taken a turn after the first quarter. So, they are seeing a sharp compression in multiples also. The high valuations earlier that market was willing to give, that now they seem to be a little cagey about that. It's not that they are doubting the business model, although you saw the media and communications vertical, which is a major chunk of revenues, that taking a bit of a hit during the second quarter. But more than that, I think it's just a P multiple, and you could see the P multiple coming down to slightly more reasonable levels, because right now Tata Elxsi is clearly one of the most expensive stock. You're paying almost what 60-70 times FY24 earnings, which is fairly stiff.
That is true, Santo. I think one of the reasons why the stock has recently corrected is also down to the fact that there is, I mean, whether it is true or not, but there is a fear, an overhang around the stock in terms of the Tata Group's plans to consolidate a lot of its business into one single dominant houses. We have already seen that happen with the metals business, where Tata Steel subsumed almost 5, related companies. There has been talk that could TCS, Tata Elxsi be the next, wherein it's subsumed within TCS, and generally investors don't want that to happen, given that the growth profile, the margin profile and the revenue profile also of Tata Elxsi is much more lucrative compared to TCS at this point of time. So I think one of the reasons why we have recently seen a lot of the correction in the stock has also been driven by that, apart from the factors that you have mentioned. But for me, I think yes, the slowdown in second quarter clearly has been driven by the media vertical, which is a large segment for that. But I think the fact that the company has retained a positive outlook towards the transportation vertical, Santo, I think that is something that investors ought to keep an eye out on. Let's not forget that Tata Elxsi was also seen as a play on the EV revolution and the automation revolution, or autonomous driving revolution that people have been talking about. So clearly, maybe slowly and steadily, the transportation vertical will also try to impose itself on the revenue share of Tata Elxsi, and I think that will get very interesting. Apart from that, if you look at the hiring numbers, Santo, for the second quarter, I don't think there has been any slowdown there. It's been very strong hiring numbers, which goes to show that the management is quite confident as far as the deal pipeline is concerned and as far as the customer traction is concerned. So overall, I think HDFC Securities is of the view that company will be easily able to double its earning per share over the next 3 years, and therefore this is a very strong earnings growth story, which probably deserves the sort of rich multiples that it has at this point of time. Well, the next stock on my radar today is Just Dial, another internet B2B, sort of a name. Now, the company's earnings, I mean, Just Dial has flown under the radar, Santo, after hitting, those highs back in September, October of last year. But since then, the stock has gone under a radar, and one of the reasons was the fact that its earnings were not showing the sort of traction that investors were expecting. But if you look at the second quarter earnings, clearly there has been a lot of healthy improvements as far as numbers are concerned, especially the top line numbers, which has grown in more than double digit in the September quarter. Apart from that, if you look at it from a longer term perspective, being an internet business to business platform, Just Dial is among the two names that come up in the listed space, the other one being IndiaMart Intermesh. So clearly this is one segment which is expected to grow almost 50% annualized over the next 10 years. When you have that sort of growth coming in, and you have almost in recent past, Santo, we have almost seen $5 to $6 billion, if I'm not wrong, of private equity money coming into internet B2B platforms. That goes to show that there is a lot of potential in the sector, and with these two names being the only two listed companies, I think investors ought to keep an eye out on this. Yes, the company is on a transformation journey. Yes, that has been delayed, and there has been disappointment with respect to a delay that has been caused. But it is pretty much sure that the company will succeed, and that is one of the reasons why Kotak Equities has retained its buy call on the stock and sees an upside of as much as 40% at this point of time.
Well, CJ, the market's concern with the stock at this point also partly, I think, has to do with the sharp fall in operating margins, because the company has managed to grow its revenue fairly well during the recent quarter, but that seems to have come at the expense of margins.
Yeah.
And if you look at where the margins currently are at compared to what they were till about a couple of years back, there's a sea of difference. Margins used to be in the range of 20% plus.
I think, Santo, but that is also down to the fact that the company has invested very heavily in transforming, its app, its internet platform, and probably that is one of the reasons, because of being in investment phase, that we have seen a decline in margins.
So you're seeing also a slight decline in revenues there. It's not just about the pressure on margins. You've also seen revenues come off sharply, which is why
on a 3-year basis, definitely.
Exactly. Yeah. So that is why you're also seeing that stock price, which was about 1100 or about a year back or 18 months back,
down to almost 600, if I'm not wrong.
About 600 odd, which is down by close to about 45 odd percent. I think the recovery in margins clearly is something that the market will be watching out for before they give a higher multiple to this company.
True, Santo. And I think something that ought to be looked out for is the fact that whether execution comes in on the transformation side. I think that is something that the market is really desperately waiting for, because the company made tall promises last year when the entire transformation happened of its app. But so far the traction has not come in, and on the other hand, India Mart has still been doing quite well, even though it has also seen a little bit of slowdown as far as earnings are concerned. But I think India Mart still has been gaining market share and has been been very resolute, and I think Just Dial needs to show that to the investors.
Well, last stock on our watch list this afternoon is Navin Fluroine. Both its specialty chemicals as well as legacy businesses have been showing consistent growth. The company is yet to report its second quarter earnings, but stock has been stuck in a narrow range for quite some time now. Now, it won a huge order from Honeywell Automation for about close to 2,800 crore, for which it has set up a separate plant, and the trial supplies have already commenced. Besides that, the plant has been able to stabilize in 3 to 4 weeks as against the target of 3 to 6 months, according to a report in Moneycontrol Pro. Now, the contract manufacturing vertical, that was a bit of a disappointment in the first quarter, but the second half of the year onwards, that is one vertical that is likely to start firing. And the most important thing is the multi-year contracts which Navin Fluroine has signed with its clients, they have a clause for pass-through of input costs. So to that extent, Navin Fluroine will be relatively insulated from the volatility in raw material prices.
I think, Santo, clearly, the long-term multi-year contracts do provide a lot of cushion to Navin Fluroine in terms of what is happening in the global environment at this point of time. But I think one of the major concerns around chemical companies at this point of time is whether their margins will sustain or not, given the fact that A, they are doing a lot of capex, and B, there is a threat to demand at this point of time because of the global slowdown and a possible recession next year. So I think besides those concerns, overall, if you look at it from a medium to long term perspective, clearly Navin Fluroine has been one of those stocks that have been performing for the past 5 years and could keep on performing for the next 5 years as well.
Well, and with that, let's take a quick look at the market at this point. Well, there, CJ, I think the index is once again close to the 50 DMA.
Yes.
It's at 17,491. The Sensex is also not too far from the 59,000 mark. So overall, the bulls have managed to save the day.
Yeah, absolutely. And you look at sectorally, Santo, I think some of the names that have been performing so well today. Nifty Auto Index higher by about 1.4%, Nifty Bank higher by about 1%, the Nifty Metal Index is also higher by about 1.2% at this point of time. Very interestingly, Santo, PSU banks are rallying like hot cakes, and I think one of the reasons why they are doing so is what is happening in the government bond market, where the government bond prices have been rallying the past 2 sessions ever since the MPC minutes have come out. So clearly, it has been very, very good session, 2 sessions for Nifty PSU Bank Index. rising almost 5.5 to 6%.
But well, you should also remember that overall in the bond market, the 3-month commercial paper that is now quoting at 7% plus.
True.
So rates are going up. So one will have to be a little cautious.
Well, Santo, you know, one of our viewers wanted your thoughts. Of course, Tata Elxsi, Abhishek Ranjan, Kanak Jalan, we have already spoken about Tata Elxsi, so you can just rewind the show and get our thoughts on Tata Elxsi there. But if you look at Ashutosh Shukla wants our thoughts on Vinity Organics. I don't know if you have looked into the stock.
We have not looked at that stock.
Specifically, we have not dealt into it, but I think the space or the general chatter that you hear is that largely a lot of the dealers and a lot of analysts out there are quite positive on the stock. It had gone through a little bit of challenges not so long ago, but overall, given the space that it is in, given the capex that the company is doing, I think this is one stock that could be very, very fruitful going ahead. And apart from that, Santo, HDFC Life, you know, one of our viewers, Rohit, wants to know why the stock is correcting. And I think one of the reasons has to do with the parent of the company.
Well, is that so?
Yeah, I think, there was chatter, right, when the HDFC Bank and HDFC merger was announced, whether what will happen to the stake that HDFC holds in HDFC Life, because we know that RBI doesn't like bankers being insurers, right, at this point of time, and clearly HDFC Bank will not be allowed to hold on to that stake. And therefore, there is a little bit of concern with respect to what happens there. Apart from that, we will have to wait and see how the earnings performance also comes down. Going by ICICI Prudential's APE numbers or the annual premium equivalent numbers, it doesn't look like it could be a very pretty quarter for life insurance companies, except for I'm hearing that LIC, a lot of analysts have certainly turned very bullish on LIC, expecting that the company has been doing quite well actually in the second quarter, and it's moving towards its goal of improving its margin profile. So very interesting quarter for insurance companies, and I think HDFC Life will also be one of those stocks to keep an eye out on.
Well, and what are the things that we need to keep an eye out for?
Well, Santo, mostly earnings. We have three Nifty companies coming out with their earnings. You have Ultratech Cement, Nestle India and IndusInd Bank will be declaring their second quarter earnings tomorrow. And besides that, of course, not much on the economic front happening, but do keep an eye out on the global markets.
Well, and with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do let us know about your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.